What does that tell you about where the market is headed?
Well, it tells me that the market is paying attention to what's happening in yields right now, especially Treasury yields. 2.7%. We haven't seen that since 2014. Now, today wasn't really a bad day in the markets. We have to remember on Friday, the S&P 500 was up 33 points. So we gave a little over half that back today. But nonetheless, the rise in yields is getting the market's attention. It's something investors need to watch going forward.
It certainly did look like investors were a little spooked by the yields overnight in the session on Wall Street. What do you think is a level that we should be watching for where we start to perhaps see a trigger and that leads to a correction?
Well, I think that as opposed to watching the broad market, right, the one sector I'm really paying attention to right now is the semiconductor sector. ETF over here is SOXX. If that breaks Thursday's lows, that to me is a pretty bad signal because tech earnings have been good so far, but that index, which has really been a leading indicator for markets, has been trading heavy since the middle of last week. That's a leading indicator for people to watch.
Tom, with that 10-year at 2.7 though, do you think this is a buying opportunity if you are a contrarian investor out there?
Yeah, if you're a contrarian, I would think so. Yes, absolutely. I mean, the move we've seen in yields is pretty substantial, especially if you consider the BOJ was somewhat dovish last week. The ECB was also dovish last week, and we're not expecting much out of the Fed from Wednesday. So the move in yields is a bit surprising. I don't think that it can sustain at this pace, but if it does, we could be in for a bit of a pullback here in equities broadly.